Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing world of corporate filings, and today we're going to be looking at a document that tells us how well a certain ETF has been doing, or perhaps not so well, depending on our findings. Stick around because we're about to uncover the real story behind the numbers in this report. If you are keen on getting these kinds of insights straight from the source, make sure you are subscribed. And hey, if you want to connect with other corporate finance enthusiasts, join our Discord community, the link is in the description below. Alright, let's dive into this report about the North Shore Equity Rotation ETF, ticker symbol COOL. This is a shareholder report looking at the period from April to September of 2025. Now, for most of you, ETFs can seem straightforward. You buy a basket of stocks, and that is that. But how they perform and what they're actually invested in, that's where things can get interesting, or sometimes a little less so. First off, let's see where this fund put its money as of the 30th of September 2025. We're looking at a sector breakdown, and it's always interesting to see the weights. Technology comes in at just 0.212%, a pretty small slice. Financials are a bit higher at 0.209%. Communications takes up 0.12%. Followed by industrials at 0.087%, healthcare is at 0.08%, and consumer discretionary is close behind at 0.079%. Then we have utilities and energy, both sitting at 0.052%. Materials are at 0.044%, and consumer staples at 0.043%. The other category is 0.022%, so it's a pretty spread out approach across sectors. Now, let's talk about the big players, the top 10 holdings as of the same date. The iShares Core S&P 500 ETF is the largest at 6.5%. Nvidia Corporation is next, holding 5.5%. Microsoft Corporation has 4.4%. Quanta Services Incorporated comes in at 3.9%. The Healthcare Select Sector Spider Fund is at 3.8%. And so is Camco Corporation. The Technology Select Sector Spider Fund holds 3.7%, and so does Apple Incorporated. Amazon.com Incorporated has 3.6%, and Uber Technologies Incorporated rounds out the top 10 with 3.3%. Seeing a lot of familiar names here, which is typical for many equity ETFs. Let's look at some key statistics. As of the 30th of September 2025, the net assets stood at a solid $52,174,176. The number of holdings was 55. The net advisory fee was $83,766. And the portfolio turnover rate, which tells us how often the fund buys and sells its investments, was 58.09%. A turnover rate in the mid-50s is pretty standard, indicating a moderately active management style. Diving deeper into the assets as of the 30th of September 2025, we see the common stocks make up 76.90% of the net assets. Within communications, we see holdings like Alphabet Incorporated, AT&T Incorporated, Meta Platforms Incorporated, Pinterest Incorporated, and Uber Technologies Incorporated, totaling $6,245,230. For consumer discretionary, we have Amazon.com Incorporated, Contour Brands Incorporated, and McDonald's Corporation, valued at $4,107,390. Consumer staples is at 2.02%, with Walmart Incorporated being the sole holding listed here, valued at $1,053,170. The energy sector at 5.16% includes EQT Corporation, Kinder Morgan Incorporated, and Valero Energy Corporation, with a total value of $2,693,719. The financial sector, a significant 12.48%, shows Aon plc, Bank of America Corporation, Berkshire Hathaway Incorporated, Capital One Financial Corporation, Houlihan Lokey Incorporated, and Raymond James Financial Incorporated, adding up to $6,511,315. For healthcare, at 4.18%, we see Alnylam Pharmaceuticals Incorporated and Johnson & Johnson, totaling $2,177,846. Industrials making up 8.69% include GE Vernova Incorporated, Huntington Ingalls Industries Incorporated, and Quanta Services Incorporated, valued at $4,530,407. Materials at 3.77% primarily consist of Camco Corporation, valued at $1,965,510. Technology, sitting at 17.54% of the portfolio, is a big one. It shows Apple Incorporated, Cadence Design Systems Incorporated, Microsoft Corporation, Nevada IDEA Corporation, and Universal Display Corporation. The total value here is a hefty $9,151,498. Utilities at 3.22%. lists Duke Energy Corporation and Nextra Energy Incorporated, valued at $1,682,540. Then we move to exchange traded products, which account for a significant 22.48% of the portfolio. Under consumer staples, the Consumer Staples Select Sector Spider Fund is listed at $1,202,039. For financials, the iShares Core S&P 500 ETF is valued at $3,413,430, and the Janus Henderson AAA CLO ETF adds $962,281. The Healthcare Select Sector Spider Fund is at $2,001,404, and the Materials Select Sector Spider Fund is $317,344. The Real Estate Select Sector Spider Fund is valued at $869,016. Finally, the Technology Select Sector Spider Fund is at $1,914,675, and the Utility Select Sector Spider Fund totals $1,049,572. Moving over to the statement of assets and liabilities as of the 30th of September 2025, total assets were $52,305,728. On the liabilities side, we have options written valued at $15,108, and various accrued expenses like advisory fees totaling $16,838. The total net assets come in at $52,174,176. The shares outstanding are 4120000, and the net asset value per share is $12.66. Now let's look at how the fund performed. Its statement of operations for the period ended the 30th of September 2025. Investment income was $321,857, mainly from dividends. Total expenses were $317,092. But importantly, fees waived by advisor amounted to $98,442. After net expenses, we have net investment income of $103,207. The big story here is the realized and unrealized gain on investments, which was a massive $10,177,091. This led to a net increase in net assets resulting from operations of $10,280,298. That's a very strong operational performance, heavily driven by gains in the market. Looking at the statements of changes in net assets, we can compare the period ending the 30th of September 2025 with the prior period ending the 31st of March 2025. For operations in the most recent period, we saw that $10,280,298 increase compared to $1,747,360 in the prior period. This really highlights a significant upswing in performance. Distributions to shareholders were relatively small at $95,426 for the recent period. Capital share transactions show a net increase of $165,023 in the latest period, compared to a much larger $40,324,556 in the previous period. This suggests less share creation activity in the more recent half year. The net assets at the end of the period were $52,174,176, up from $41,824,281 at the beginning of the period. The financial highlights section gives us a per share view. For the period ended the 30th of September 2025, the net asset value per S-share started at $10.28 and ended at $12.66. The total return was an impressive 23.46%. For comparison, in the prior period ending the 31st of March 2025, the net asset value went from $10 to $10.28 with a total return of 3.40%. This clearly shows a much stronger performance in the latter half of the reporting period. The ratios of gross expenses to average net assets were 1.30% and net expenses to average net assets were 0.90%. The net investment income to average net assets was 0.42%. The portfolio turnover rate was 58.09%. Now we get into the notes to financial statements, and this is where we find the nitty-gritty, the risks and policies. Under organization and significant accounting policies, it confirms the ETF is an exchange, traded fund, a series of Spinnaker ETF series registered under the Investment Company Act of 1940. It started operations on the 1st of April 2024. Its objective is long-term capital appreciation by investing in various equity market sectors, with at least 80% in US and foreign equity securities. Regarding investment valuation, securities are carried at market value. Those on exchanges are valued at the last sales price for over-the-counter securities. It is typically the mean of bid and ask prices. Importantly, if market quotations aren't readily available, They are valued at fair value as determined in good faith by the Board of Trustees. This gives them some flexibility, but also introduces a degree of subjectivity. Within fair value measurement, they refer to ASSE Topic 820, which defines fair value and sets up a framework using 3 levels. Level 1 includes unadjusted quoted prices in active markets. Level 2 involves observable inputs other than Level 1 quotes, like prices for similar instruments. Level 3 uses unobservable inputs, requiring more judgment. Good news here, for the period ending the 30th of September 2025, the ETF held no Level 3 securities. This means their valuations are based on observable market data, which is generally preferred for transparency and reliability, common stocks and exchange. Traded products are all categorized under Level 1. This next section, risk considerations, is crucial. They cover equity securities risk, stating values can be volatile and affected by many factors. Foreign securities investment risk discusses currency fluctuations, depository receipts, foreign market challenges, and political and economic instability. US government securities risk is also mentioned, with a note that some aren't backed by the full faith and credit of the US government. Sector focus risk is a big one because this ETF might concentrate in certain sectors, making it more sensitive to sector-specific risks. They detail risks for consumer discretionary, consumer staples, financials, healthcare, information technology, materials, real estate, and utilities. For example, the financial sector faces risks from regulation, interest rate changes, and loan losses. Healthcare companies deal with litigation, patent expirations, and long regulatory processes. They also detail risks from selling or writing options, explaining it can lead to losses exceeding the investment and limit profit potential. Risks from purchasing options are also laid out, highlighting the risk of losing the entire investment if the option isn't sold before expiration. Hedging risk is mentioned, noting that hedging techniques may not always protect against market declines and can limit participation in gains. Preferred securities risk and fixed income risk are also covered. A key point here is non-diversification risk. The report explicitly states the fund is non-diversified, meaning it can invest a larger portion of its assets in a limited number of companies. This makes it more susceptible to the performance of those few companies and any economic, technological, or regulatory events affecting them. This is a critical factor for investors to consider. They also address cybersecurity risk, acknowledging the fund's susceptibility to breaches that could lead to data loss, corruption, or operational disruption, with potential regulatory penalties and financial loss. Market risk is broadly defined as the risk that a security or the ETF shares may fall in value due to various economic, political, or regulatory factors. And new fund risk is mentioned because the ETF has a limited operating history, meaning there is a risk it might not be successful, could fail to attract assets, or might even be liquidated. Under transactions with related parties and service providers, we see the advisor and its fee structure. The advisory fee rate for North Shore Equity Rotation ETF is 0.75%. The amount earned was $182,208. Importantly, the amount waived by advisor was $98,442. This waiver is part of an expense limitation agreement where the advisor agreed to limit annual operating expenses to no more than 0.90% of average daily net assets. This is a positive for investors as the advisor is capping costs. Let's quickly glance at purchases and sales of investment securities for the period ending the 30th of September 2025. The aggregate cost of purchases of non-US government securities was $28,682,525, with proceeds from sales of $28,128,895. There were no purchases or sales of US government securities listed. In-kind purchases were $6,228,531, and in-kind sales were $6,345,379. These transactions are typical for an ETF's creation and redemption process. The federal income tax section notes that no provision for income taxes is included as the ETF intends to comply with regulations for regulated investment companies, distributing all taxable income and gains. The cost of investments on a tax basis was $44,033,519, with a net unrealized appreciation of over $7.7 million indicated. For remuneration paid to directors, officers, and others, the aggregate compensation paid to trustees for the period was $4,392. No special compensation was paid to trustees, and no compensation was paid to any officer or affiliated person of an officer or director. Now, looking at the North Shore Equity Rotation ETF's report, A few things stand out. The performance in the latter half of the reporting period was exceptionally strong, with a 23.46% total return per S-share. This was largely driven by significant realized and unrealized gains on investments over $10 million combined. However, the report flags a non-diversification risk, meaning the fund's performance is tied to a smaller number of holdings compared to a more diversified ETF. This means that while a few big winners can boost returns significantly, a setback in one of those key holdings could have a more pronounced negative impact. The fact that the advisor waived a substantial amount of fees and had an expense limitation agreement is a plus for the investor, capping operating expenses. The use of level 1 securities for valuation also adds a layer of transparency. So, what is the takeaway? The North Shore Equity Rotation ETF demonstrated strong market-driven gains in the reporting period. But investors should be acutely aware of its non-diversified nature. This strategy can amplify both gains and losses. The advisor's commitment to limiting expenses is a positive sign for cost-conscious investors. Alright. That is our breakdown of the North Shore Equity Rotation ETF's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the non-diversified approach is worth the risk for those gains? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And subscribe for more deep dives into the corporate world. And don't forget to check out the Discord community link in the description for more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.